Bank of England is widely expected to keep rates on hold this Thursday at 0.75%. The central bank is in wait-and-see mode ahead of Brexit amid ongoing political and economic uncertainty. Meanwhile, the pound closed last week sharply higher, climbing to the highest level since July. Kallum Pickering is a senior UK economist at Berenberg and joins us down the line from London. Kallum, good to see you. Tell us, what are you expecting from the central bank this Thursday?
Well, this Thursday we just get the minutes from the September MPC meeting. We'll probably get a reiteration of the guidance we've had now for well over a year, which is if we get an orderly Brexit, the Bank of England expects that it will have to start to hike interest rates again. So probably we should get a moderately hawkish tone. Of course, there'll be a caveat there that if indeed the UK ends up with a hard Brexit, the bank stands ready to move interest rates in either direction. I'd point out that the Bank of England is a bit of an oddity in the central banking community, whereas the Fed and the ECB are now turning suitably dovish amid global uncertainties. The ECB reinstating QE, the Fed cutting rates and probably 2 more times this year. The Bank of England remains on a hawkish tilt. Why? Because the UK has an inflation problem. Wages are growing at close to 4%. Inflation expectations are around about 3.5%. The Bank of England eventually will have to do something about this, and it is betting that in case of no hard Brexit, that interest rate hikes will be around the corner, probably in 2020.
So is that your expectation, that the next move is going to be up rather than down?
If there's no hard Brexit, my expectation is there will be an interest rate hike coming probably in the first half of next year, depending on the length of any likely extension. In case of a hard Brexit at the end of October, I'd probably expect the Bank of England to cut rates and do some more QE in November.
All right, so what's your temperature on the strength of the UK economy right now?
Well, on the domestic side, that is households, fundamentals in the UK look pretty good. The temperature is okay. It's not cooling in any sense. The labour market remains firm. Wages look pretty good. Retail sales are a consistent strong point. Where you see some weakness is on the export-oriented industrial side. That's due to global uncertainties, trade wars, the China slowdown, on top of the additional factor, which of course is Brexit. My bet is that in Q3, the economy would have expanded by about 0.2% quarter over quarter, a little recovery after the contraction in Q2, but growth will remain subdued, well below trend until Brexit is sorted. We'll still get this two-sided economy of strong consumers, weak producers. Once Brexit is sorted, either way, things will turn around quickly. In case of an orderly Brexit, growth will look much stronger for a 2 or 3 year period with much stronger business investment, much stronger industrial production.
And what about inflation? Of course, a lot of it is going to be dependent on Brexit and indeed the impact on the pound. But broadly, what are you forecasting for price levels?
Well, inflation is probably going to drift anywhere between 2 to 2.5% over the next 2 years in case of an orderly Brexit. Wage growth was 4% in the latest estimate year over year. It's risen from a good 2% nearly 18 months ago. Labour demand is at close to a record high. Inflation expectations are elevated. So the outlook is towards more inflation over the medium term. In case of a hard Brexit, things would get worse in the short run. A likely weaker sterling would push up import prices and push up headline inflation, much like after the Brexit vote. Only the difference would be, if we get an orderly Brexit, the inflation would be largely driven by positive factors, whereas in a hard Brexit, the inflation would be driven by negative factors.
All right, now I wanted to ask you about the pound as well, because obviously we saw this bounce back last week. I mean, were you expecting that? What did you make of that move? And do you think there's more upside to come?
Yeah. Well, there's more upside so long as we avoid a hard Brexit. I think the pound is undervalued against its major pairs. The upward move last week was mainly a function of markets recognising that Boris Johnson and his ploy for a hard Brexit was not as strong as it looked over the summer, because when Parliament returned, they quickly saw to it that a hard Brexit at the end of October would become a pretty small prospect indeed. So markets, recognising the fact that the UK is very likely heading for another Brexit delay, have just brought down the hard Brexit risk a little. I followed the market. I was at 40% before Parliament opened. I'm now at 35%. Actually, sterling is a good way to guess the market feeling about the Brexit risk. Take the sterling against the euro. I think in a hard Brexit, it could go to parity. If we get an orderly Brexit, it could go to 120. So a sterling euro around 110, 111 implies the market thinks there's a 50% chance of a hard Brexit. From here, we get an orderly Brexit, this pound goes up.
Finally, we know Mr. Carney's term is coming to an end at the beginning of next year. I mean, who do you think could become his successor?
Well, it's hard to tell. Possibly Andrew Bailey at the FCA, that would be a good choice. Very sensible pair of hands. Possibly Ben Broadbent, the Deputy Governor, again, knows monetary policy very well, has been at the bank now, I think, since 2014. Another safe pair of hands. Rajan, that would be another good choice. That would be, in a way, a good replacement for Carney, bringing in another foreigner at the Bank of England with a wealth of global experience. That would put the Bank of England in good stead. The outsider's chance could be perhaps someone that Boris Johnson prefers, but actually I think the UK will probably go with a safe pair of hands in the end.
All right, Kallum, thank you so much.
Thank you.
That was Kallum Pickering, Senior UK Economist at Berenberg. I'm Victoria Scholar, and thanks for watching IGTV.